Hello, hello, hello. Just wanted to give a super quick update after the live stream this morning. I was reading it's wrong. I misread the current target rate. So just wanted to clarify because this is actually the 50 basis point and this is the 75 basis point probabilities. So right now the probabilities are 35.5%, 50 basis points, 75%, 64. Misread this number right here. Just wanted to get on and correct that. Bob was correct. So when we make a mistake, even in a trade, you have to correct it if you get in a trade for the wrong reasons or you misread even a number. And then you correct it. So, and that's a good tie-in because let's say you misread an entry, like you're measuring out your double top, for example, and you measure incorrectly, and you get in a trade at a double top and it wasn't actually a double top. You know what you do? You get out of the trade. You don't try to scratch it. You don't try to do anything. You just get out of the trade. Get out of the trade. So that's the key thing. Had to get out of the trade and correct that, by the way, just to recap. Had the strong snapback rally. This was a pretty aggressive move back into the clear path. Remember, I told you I was watching the 50 to 62.5. We got the close above the into that zone, and then we got the close above the 62.5. Next target's the 75. So I'm watching more for now choppy price action with a potential short upwards bias today because we should technically at least hit the end of the clear path to the 87.5. So that's what I am watching. We've returned to the breakdown zone also. And we've got through this breakdown zone. So now you have some support. Again, I'm going into more of a choppy mode. We have some options. We have some pretty hefty gamma still expiring today on the weeklies. But we did close above the 62.5. So I am not targeting. Again, the new breakdown prices did hold. Pretty substantial snapback rally. So I also pay attention to clear path moves. You can see this paused right there, but then you had the momentum coming up here, and just off this little move from the pre-market, again above the 62.5. So we should still come back up here and test these probabilities. And on the bigger pullback, it's even above the 62.5. So continuing to watch. And look where that 87.5 puts you, right at the pre-market payrolls. So I'm not saying you can't have dips, but I am not aggressively targeting the short side. We're still in buy the rah-rah market. Buy the rah-rah market. Now we could, because of it's a Friday, we don't have much going on the rest of the day. All right, we could end up for a choppier mode. So if you don't have a setup, don't chase it. But I am watching for, even on this pullback, some rotations back up. What would change that again? We should still favor some higher prices, but we've already put in a pretty substantial momentum move. What would change that? I would not be changed from that chopper to upward bias until we got back below 13,183 on the NASDAQ or the S&P. See, it's holding up pretty well. The S&P, I would not be changing my bias until it got back below 441.22 area. So we, again, choppier, but with those closes this morning above the 62.5 and the momentum bar still favoring some return to the higher price areas going on for today. All right. And again, for the latecomers, I wanted to update, give people watch this on replay, but when you are wrong, I was incorrect. I misread the chart this morning. This is a 50 basis point. This is a 75 basis point. I needed to correct that. And the tie-in for those latecomers, if you put on a trade that is incorrect and you did your analysis wrong, you get out. You don't try to massage the trade. You don't try to justify the trade. You admit, hey, I've made calculations wrong. Okay, you admit when you're wrong and you get out so you can start with a clear slate. I don't care if it costs you a bit of money. I don't care, you know what, if I come on something and misstate something, I got to correct it. It's part of being it's part of putting on the big boy pants and becoming a proper trader or investor and being accountable to what you put out there, whether you run a live stream or not. You got to be accountable to yourself at the end of the day. So that was my overall message. So I wanted to clarify that, and I figured I might as well just give a market update just based off the probabilities right now. Again, we could get into a choppier market, so don't just chase. Don't just, if we're sitting here at the end of the day, especially overhead, since we've retested a breakdown zone, even with the higher price action on this pullback, you have a lot of stopping points. Remember, that's why I stress the easier trade was the momentum. See, let me just use this as one other teaching moment. This is why we stress clear paths. Okay? This was a clear path move. You see it on the S&P. This was a clear path move, and look what you made into. Yes, you have a downwards clear path move, but we don't have momentum now that the sort of the open market is waning. If we do get momentum, then I could trade back into this. Okay? Other than that, we've already wiped out this clear path move, at least to the breakdown zone, the major breakdown zone. So that trade, that momentum trade is over, and without a lot of other info coming out, I can't be super aggressive anymore. Let's see. I'll get through some comments. Hey, George, thank you for coming back. I didn't even put ads on this or anything else because I just want people to watch this and just tune in real quick to see what I had to say. You're welcome. Again, you're welcome, George. Hey, Patrick, glad you're here. You know what? I just want. No, it's not wrong. I'm wrong occasionally. It's everybody's wrong. Hey, you can be wrong. You're welcome, Ramsafal. Hello, Mike. Excuse my absence, taking some time away from trading to focus on some other things in life. Hey, Wavy, that's not a problem. This is a great time to take the step away from the markets. You're better to take it away in the summer. Or, you know what, I like to take more time away at the end of the year around, December, because there are times sometimes there's more important things to do. Still watching all the videos. Thanks as always. Again, I thank you for tuning in. Buy the raw must be versatile. It's okay to be wrong, not okay to stay wrong. That's true. TLT dumping. You're welcome, Raj. Oh, yeah, I didn't get into the notes. The notes we had, again, I talked about more aggressively raising the stop yesterday. This little short-term inverse head and shoulders, I wanted to clarify that, was a stop. The long-term is still easily in play. The long-term's easily in play. By the way, daily cycle's getting to the bottom. So I will start watching for another short-term reversal play. The long-term reversal play is still intact. The more aggressive stop, remember, is below 117.05. The less aggressive stop, because you got to this is a weekly pattern, a daily to weekly pattern. The less aggressive stop is 116.19. So this could take multiple. I didn't get to that on the live stream either. But that's why I was using this other harmonics. I'm using some more aggressive stop techniques to the upside. Let's see if there's anything else. The VIX, little bounce up and pretty sharp reversal, staying on the close. Again, this is another reason. This is delayed date. I can't share my trading platform. I wish they didn't do this delayed. By the way, the double's still in play, but retesting the lows from the 29th of July. So unless we get a sharp intraday reversal, again, can't sit on the bearish side, especially with this little. You had the non-farm payroll gap up and then just the quick gap fill. And not only just a quick gap fill, and the gap fill, remember, was not to the upper end of the candle, it's to the close, which you filled, but not even pausing here. Not even pausing. Look at this. This is a power move down. Yes, we will have another clear path move going up, but at this point on a Friday would not be fighting it. So unless I see some sharp kind of reversal or a major, not a major bottoming pattern, some kind of bottoming pattern, I'm not fighting. I'm not targeting to the downside with that. Let's see. Well, I do care about everyone here. I mean, I'm not. Yes, again, this channel is not the money making channel. This is not. I'm not a. I guess you could call me a YouTuber, but I don't sit there and put out clickbait to try to get people to buy stuff or to do something. I'd rather have people learn to navigate the markets and to become successful at investing and trading. That's my end goal here. All right, with that, again, this double is still in play. I'm thinking if there's anything else to watch for that we didn't cover this morning. Again, strong reversal up in the dollar, but we start getting some momentum, especially above 107. Then I will continue to target, but this dollar moves probably over for the day also. Remember, European close coming up shortly. So, and that's going to wind stuff down more so, and any impacts from Europe. Euro's still in a range. Bitcoin rallying back up with the thing, but it's still, we're just closing in on the major target area. Where when I say closing in, I mean with the channel and this 50% target I've talked about. So that's still key. That's still in. Again, unless we start getting the close below about 22.5. Anything else? Nothing else. Let's just peek at Tesla. I didn't even get to touch on that. By the way, this double still is in play. They voted with the shareholder stuff for the 3-for-1 split again. I'm actually surprised they didn't get any more juice. That's actually not very bullish long term in my book, but this double still is in play, but it's not triggered. So I can't get short term more aggressively bearish, and it is against a 4-hour and daily rotation zone, so it is a little lower. Although you do get the close in here, it is within the daily rotation zone, and it could take it to the other side. So just be aware of that for bullish areas on. Sorry, I got to up the target. For bullish areas, this is a daily double. The first and second targets are within that and returns it to this little breakout zone. So keep that in mind if you're short-term bullish Tesla, because we are at cycle tops and rolling over on the daily and potentially on the weekend with a pretty significant topping pattern. But that's not for new lows just yet. That's for a pullback move. What's going on with Carvana? I haven't looked at Carvana today. Besides there, is something going on? Oh, I hit the thing. I hit the wrong symbol. There it is. They had their earnings yesterday. I mean, and it was a big miss, but it's, again, we're in the juice. We're still in juice mode, everyone. We're still in juice mode. It's buy the crap. You want plays. Again, we have a lot of short squeezes going on. We still have short squeezes going on. This is why we don't have a major top. Look at ARK. Still gap down. Recovered the gap already. I'm still expecting ARK to hit this 52.58 level, which is pretty significant. You have a significant high up there for shorter term plays. We still on the, net at least beat. Net at least beat, but for net, I would be targeting the full gap fill play. This before the downward gap fill, which will be a longer term play, I'd be targeting the short term gap fill to the upside. Yes, we're still in pump mode. We are still in pump mode. It's gonna take some more. Remember, and again, information. I'm trying to share information. So first, it was good news from the job reports equals bad news because the Fed has to hike more or can't pause. But then it's immediately shifted. Well, look at the strong economy. Look at the strong jobs report. There is no recession. So it's when you have things flip on a dime with, all right, good news is bad, but then good news is good. It's just the excuse to literally let's keep buying. So I can't fight that. Again, without a topping pattern, and just another recap, then I'm going to wrap it up. But just here, and I'll talk about this probably on the podcast today, even on pullback moves, even on pullback moves, you have so much key support in here. Yes, those are short-term bearish, not long-term bearish yet. Because why? We don't have a major topping pattern. And overall, I still think even if we get a pullback, unless we get something to change drastically with some underlying fundamentals, we get a close above, we get a weekly close above about 42.24. I'm targeting the 43.37 to 43.68 area in the S&P for a bigger upside play. We don't have that on a closing basis, so everything until then would be a shorter play, but there's still potential upside plays. And that does not rule out my long-term bearish mode. All right. Hope everyone has the rest of, let's just peek at beyond. Has a great rest of the trading day. Probably the afternoon session. Remember, we did not trigger this potential head and shoulder. Potential head and shoulder not triggered. Can't trigger it on a gap open. So that's off the table. Remember, that was only going to be for getting out of a double early, which you hit the first target. We still have first and second targets. Again, this was a horrible earnings report. Horrible. Horrible. But let's rally it. And we had the doubles. Just like the ARC doubles. So you still got to sit unless we get the key breakdown plays. By the way, the head and shoulders is off, but you now just have the key 50% target. So I'd still use that on at least a trailing stop for a double. If you're trying to play this or you're playing it even short term, nothing changes. And was this a little double that was triggered? You'd have to measure it out. And yes, it already went, but yes, it was. Why? Because the first and second targets were within the candle body move that started it. So the first and second targets off the momentum on the open were hit. So that would have had to be a short-term little momentum play to the upside. So the short-term double, just for the people trying to learn along at home, was triggered. The longer-term double is still in play. And that's also why I have to stay with some of this a little more short-term bullish because, we're still running up to the upside. We still have probabilities to the upside. So I will be cautious with rollover plays. By the way, I showed you this yesterday. The AMC hit its double, retracing, and now I'm watching even to see if this can fill the gap to the upside. AMC longer term is another massive sell, but short term, you still got the juice. So just lesson, if you don't have to play the juice stocks, and I think a lot of people shouldn't because longer term we're going to have rollovers. They're just intraday to short-term swing pump plays, and you should be grateful because they'll set up for new shorts coming up in a while. But if you don't have anything to play, just don't play it. Just don't play it. Again, Apple gap down, going to fill the gap today, and I'm still expecting higher prices in Apple, even with a bigger pullback. Even with a bigger pullback in Apple, still expecting higher prices to complete the double. So again, don't fight the short-term trend is up, even if you're long-term bearish. You can trade counter trend, and the short-term up can still have room to run. With that, now I'm going to say, have a great rest of your trading day. If you don't have anything to do, enjoy the summer weather, and I'll talk to everyone later today. Bye for now.